What's up, guys? Hopefully you all are doing well. It's been a while since I am going to post this video on the YouTube and also on X/Twitter for the public. Wanted to give you guys a in-depth market breakdown, kind of talk about my trading, things I've struggled with, and also give you my view on where I think the markets are heading, as we do have some things heading into next week. Into next week, as um, a new month starts next week. In at the end of the week, in August, you have big earnings, right? So we're starting to head into earnings season. So I wanted to give you guys my view on the market. So the chart I have up right now is the Nasdaq. I want to kind of go over what we've seen recently, the last few months, as it has been very volatile, and I do expect the markets to continue to be extremely volatile. Uh, Honestly, the next 2, 3, 4 years, right? It's going to be a headline. It's going to be an economic data driven. Obviously, the markets are always kind of economic driven, economic data driven, but we're really going to see some big swings, I think, in my opinion, in the economic data, um, because of tariffs, because of uncertainty, because of consumer sentiment and consumer spending, potentially lowering. And I think the psychological aspect of tariffs, which I'll dive into a little more in depth, I think will play a part into that. But here I kind of just have three phases marked out. So we had a consolidation phase from pretty much December. You formed the all-time high price here, and then you consolidated for a while. You never broke out at all-time high. You had a kind of an old swing low. I guess I could drag this over a little more because this was kind of your consolidation here. So you had the all-time high price here, and you never broke above it, and you almost traded above it here. If you go to the continuous contract, you did you trade above it? No, you did not. Okay, I thought you did trade above it there. Going back to current contract, um, but you never traded above the all-time high here on the Nasdaq, right? So you made a lower high here, and then you really started to break below that consolidation, and this is where inside of the community we started to get a little more bearish as the market started to break down here. I had no idea the market would sell off this amount, so I'm not going to sit here and say, yeah, we caught this whole move, but we were able to outline and analyze this move and participate in this. So this red shaded area is the bear trend, right? I would say the bear trend really started around here. Once you started to break below that consolidation, and the market started to make lower lows and lower highs, right? Lower lows, lower highs, and then here on April 2nd, reciprocal tariff announcement from Trump. Markets in free fall, and then started to bottom out as that tariff, the reciprocal tariffs. Obviously, tariffs didn't fully get reverted. There's still tariffs activated and put on certain countries, but the main concerns started to fade away. Markets started to rally. Trade deals started to get done. Markets like that, right? I would say the bear trend really started to end here, right? Obviously, you can pinpoint the exact bottom here. That's hindsight. I would say once the market really started to make a higher low here, that's when kind of signaled the potential shift of a new trend back up. Right, so you made a higher low here from this low, and that's when that bull trend really started, and you just continued. You gapped up. Pretty sure this gap up was on some China tariff news, and then you just continued. It was either that gap or this gap. I can't remember what gap it was. And then just continued. And the market has just continued to rip higher, made higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, and has continued to trend higher. So when it comes to understanding trends, it's important. Obviously, the technicals are important, but it's also important to understand, why. Why are we seeing this trend, right? So what is the bull case here? Right? I think the first thing to understand is earnings. I don't think earnings have been bad. I think earnings have been okay. I don't think earnings have been extremely great, like we saw um, 1 to 2 years ago. Like if you go to any tech earning, it was just killed it, right? But earnings haven't been bad. I'm not saying earnings have been bad at all. I would say earnings have been good, right? I wouldn't say great, wouldn't say awful, wouldn't say just okay. I would say they've been good. That plays a part in this bullish trend because when earnings are good, right, that's going to create what? It's going to create more bullish momentum in the markets. And there's a lot of talk about, there's always been talk about this. If markets are efficient, markets are efficient for the most part, right? Markets try to be efficient. Obviously, there's less efficient markets like crypto. It's not efficient at all, especially altcoins. But um, the stock market, equities market is pretty efficient. But momentum can play a part. And during this bear trend and during this bull trend, I would say there was a lot of inefficiencies within this. And I think we'll continue to see inefficient price action. And that creates opportunity for traders. Um, and momentum plays a part in that. Momentum can create that inefficient price action. When there's just a bunch of buyers because there's a bunch of buyers and there's just a bunch of buyers because there's a bunch of buyers because there's a lot of momentum and a lot of people FOMOing in. That's what can create that inefficient price action. All right. So earnings have been good. Okay. They haven't been bad. They haven't been awful. They haven't been great, but they've been good. And that plays a part in that. Obviously too, right? Tariffs is what caused that bear trend. But, the flip side of it, the flip on tariffs, Trump kind of backing out on some of the tariffs he had implemented is what caused this bull trend or for the markets to flip, I would say. Um, so tariffs is a thing, and it will continue to be a thing to look at, right? Because you can make the argument as well that the current tariffs in place could also cause the markets to fall potentially in the near future. And that's something what I'll talk about that as well. All right. So when it comes to this recent move, I would say those two things have been the main drivers. Obviously, um, I would say hedge funds offside. I would say that has played a part into it. Hedge funds had one of the biggest outflows of U.S. equities during the tariff um, blow up, and hedge funds being offside and then having to pour back in to the markets when things really flipped out of nowhere, that creates momentum as well. That creates extreme volatility and extreme momentum to the upside as you see these hedge funds just pile back into the markets, right? So I think the hedge funds being offside during this downward move and things just flipped that fast, kind of being caught off guard, they had to pile back in there. All right, so when we look at the potential bear case, I wouldn't even my view on the markets right now. I don't think we're entering a extreme bear market. I don't think there's signs of that. Um, I'll do number 4 here as well. Economic data um, has been good. It hasn't been awful. I would say there's some concern of inflation and slower consumer spending, right? And we'll talk about that in the bear case. So, the economic data has been okay, right? But you got to understand economic data is also delayed, right? It's not when economic data comes out, it's not what's happening right now. It's what happened a few weeks to a month back, right? It's not what's currently happening. So we are starting to see some concerns with tariffs that are implemented now and how that has driven, spiked up inflation a little bit. It's not major, but that is something to keep an eye out on, and that's what could create a bear case, and that's what we'll talk about. That's where I would say bear case slash, because I want to put these two together, because I don't think you see a huge bear trend back down. It could happen, but we'll talk about those things in a second. Um, so that's the bull case there, right? And that's what's really driven these markets back up higher. Hedge funds piling back into the markets, the flip on tariffs, earnings have been good, economic data has been okay. It's been good, right? But there are some concerns, right? So what's the bear case, right? In my opinion, I do think earnings are going to trend in a more when it comes to the earnings direction. I think earnings will trend to a more okay slash decent outcome, right? Um, and the reason I think this is I do think AI is entering a mature phase. Now, that does not mean I think AI is dying off. That does not mean I think AI is useless. That does not mean I think AI is in a bubble. I just think there's a phase we're entering now where obviously we've had this huge AI run, and obviously I think AI is going to continue to change, just like the internet, right? The internet, you had the dot com bubble in 2000. Does that mean emails went away? Does that mean technology didn't further advance as the markets were declining? No, things continue to advance. But one thing people don't understand is markets don't have to go up because if technology's still progressing. The internet was progressing massively, even when the market was falling, right? So I do think we're entering a phase where AI is entering a mature phase. Obviously, you're seeing these tech giants continue to invest in AI. I mean, you have Nvidia. Obviously, you have Amazon doing a bit. Palantir is a big one. Um, Tesla obviously investing a good bit. Meta, obviously a big competitor in AI. These are just a few, right? I think I'm missing another one. Apple, not so much. Apple hasn't really done too much in AI. And you kind of look at their stock price and look at their chart and see that they haven't really benefited from the AI move because they're not really getting involved in AI. And that's just Apple. Apple's not really known for pouncing on first. Apple usually likes to wait a little bit. Um, so the capex is for these companies and how they're looking to invest, a lot of money. It's in AI. Everybody's looking in AI. But I do think we're entering a more mature phase. And why I think that is in simple, right? I'm just seeing a lot of AI tools come out. I'm seeing a lot of AI hype that we've seen for the last few years. It's just being spread everywhere. I'm seeing more people talk about it. And obviously, I don't like using this as an indicator to try to trade, but it's something that to me shows that things are maturing a little bit. And I do think that is going to play an impact in earnings. And I do think a lot of these companies are going to lose some market share. I'm not saying these companies go to zero. I do think we're going to see new companies come out and start to take some potential market share. And that could cause the NASDAQ to potentially fall as we start to see. I mean, the main reason NASDAQ has been holding up so well is because of a few stocks, right? So I do think we'll see a shift there. Um, and I do think earnings are going to start trending in a more okay, decent phase. I'm not saying earnings will be terrible, but I do think they'll be a more okay, decent phase where we'll start to see some profit taking and where the markets potentially start to enter a more higher time frame consolidation phase rather than the expansion bull phase that we've been in ever since the bottom of April. Okay. The next thing is obviously tariffs. Obviously, you can have tariffs on both sides here. I do think tariffs are going to impact the economy. I think short midterm, it's going to hurt the economy. Um, Long term, it may be beneficial, but you just can't. You can't. One thing that you cannot do, and this is important to understand, you can't work on the economy and fix things or try to fix things, but also expect the markets to trade higher at the same time. You just can't. You can't have good and good. There's always, it's good and bad. Now, the important thing, they try to do is, yeah, you want to have good, you're going to have bad, just try to minimize the bad. That's what you have to try to do. But there always is going to be some bad side, right? There's pros and cons to everything, right? So I think tariffs have shown that they are going to increase inflation in some areas. I think the psychological aspect of tariffs as well, I think, in my opinion, this is number three, I think is going to lower consumer spending. I think consumers are going to start, I think we're already trending in that direction, but I think consumer spending is going to drop off. And I think that'll play a factor in the potential decline in the markets in the near future. And I'm not calling for a 20-30% drop in the markets. I'm calling for maybe a 5-10% drop and we enter a consolidation phase within the markets. And then maybe you trend back up. I don't know. I just don't think it's likely where we're currently at, where what the valuations are currently at, with the uncertainty we have. I mean, valuations are back at what they were before all of this uncertainty. So when you put that into perspective, I just think we are going to enter a phase very soon of some profit taking, heading into these earnings, seeing new economic data come out. I do think things are really going to kind of slow down, right? We've just been in this major bull market for like, I mean, you can argue for the last 10, 15, 20 years. I don't think we're in a top here. I'm not calling for a top, but I think we're entering a more short midterm consolidation phase. All right. So those are my few reasons there. The psychological aspect of tariffs, the actual economic aspect of it. I think consumer spending is going to drop off. I think earnings are going to be okay slash decent. I think there's high expectations for AI, and I think for good reasons. I use AI. I think AI is a great tool to use. I mean, it makes things very, very efficient. I'm able to do work that I did before, but I have 3, 4x the output now. So AI is here to stay, but the markets just don't. One thing people get, they misunderstand is markets do not have to trade higher for tech to advance. All right, people think that, when there's tech advancements, when tech is progressing, and we're seeing all this cool innovation, that the markets have to trade higher. No, they do not. Right? You go back to the biggest, go back to 1999, 2000s, just the biggest explosion of tech innovation. The markets were declining rapidly, but you still were getting huge innovation during that decline. So I'm not comparing. These are two different things. These companies that are worth the valuations they're at now, I think are pretty. I think it's pretty accurate. I think they, pretty close to around their fair value and what things should be at. But when it comes to where I think we're headed, I think we're most likely going to start seeing some profit taking from this just insane bullish momentum that we've seen. All right, so that's just something I want to talk about there. I'm going to go ahead and I won't delete that now. But in terms of where we could trade, let's talk about that as well. So where we could trade, a few things I am looking at. I'll go ahead and delete this just so I can have more room here. I do like this old gap in the Nasdaq, so it's around 20,591. I think the exact is going to be 20,000. Yeah, 613 there. I wouldn't be too optimistic about the Nasdaq trading all the way down to this level. It could happen, right? So from where we're currently at, that's about 11% drop, 12% drop. But ES already traded down to that gap, right? So I don't think the market has to trade down to that level because ES already traded down to it, and the Dow already filled that old gap. So I just don't think the market needs to trade back down all the way to that level in the Nasdaq, but it's a level to have on your charts. All right. You also have this old low around here, so I would watch kind of this range here on the Nasdaq on NQ, which is around 21,000 to like 21,100. I like that range there. Okay. Obviously, you have the old all-time high price here as well, so that would be something to watch. Another big level I like. I don't know if the Nasdaq will trade all the way down to here, but it is a very big level to watch, as it has shown to be treated as support, and this is going to be the yearly open. Right, so this is where the market opened up on the new year. Okay, and we'll go ahead and make that a red color and make it bigger there. So you can see the market rejected this previously, actually went short here. And I'll talk about my trades I've taken and the struggles I've had recently. I actually went short here and had a very nice short trade here. But then I really was looking for the market to trade back down. And throughout this trend, I've taken a few longs intraday, but I've really been trying to get in on a bigger time frame short position to see a move back down. And I've taken some stabs from that. But that's a lesson in itself. And it's very important to understand, one, timing in the markets, but being patient as well, but also surviving. You have to survive in the markets. You have to have capital. You have to be ready to execute. and have the capital needed to execute. One thing a lot of people struggle with is, they take a trade, they blow up, and then the next thing you know, the market starts going in their direction, but now they don't have the capital to execute on. So have the capital. I can't stress how important it is to have capital ready to execute, and just don't bet the whole farm on a trade. Okay, you can have a 70% win rate. You can have an 80% win rate. You can have a 90% win rate, but there's still that 10% chance, which is not an insane. That's not crazy, right? 10% chance you can hit that. And when you bet the whole farm and you hit that 10%, which you will at some point, if you do have a 90% win rate, it's just not going to be. It's not going to be fun, right? So understanding your risk, understanding your position sizing, understanding timing, and understanding how important it is to survive in the markets is extremely important. It hasn't been fun for me, right? I've been wrong on the idea of us seeing it move back down. I did not think we'd trade all the way back up to all-time highs. I was completely wrong on that idea, and I've taken some stabs because of that. But I'm alive, right? And that's important to understand. All right, so we have the yearly open here. We could get a retest of the yearly open, so I would watch that as well. I'm gonna go ahead and delete all these, but you can get the idea of those different phases there. So these are the levels I'm currently watching on the NASDAQ. Yearly open, make sure that's the exact yearly open there. Yeah, so yearly open there. Swing low down here, old gap down here. Obviously you have old gap here, and then this overall low. That's like extreme bear case. That's not what I'm looking for right now. For me, what I'm expecting, my view on the market, is I think we're potentially entering something like this. I think we could be in some sort of bigger consolidation where we see something like this. That is kind of what I'm looking for. I don't know if we'll go all the way down to the yearly open, but this is kind of my expectation where we see something like this. Could we even trade lower and maybe do something like that? Maybe, but this is kind of what I'm expecting. And what I will be paying attention to is obviously the technicals, right? So if I go down to like the 4-hour chart, is there anything bullish about or bearish about this chart right now? Not really, right? When you look at the structure, the market's in a clear uptrend and has continued to make higher. Technically, it's kind of made higher lows, but obviously it's made higher highs, right? So I'm waiting for the market to break down and potentially make a lower high. That's what I'm waiting for on the 4-hour chart. That has not been the case. You go to the daily chart, extremely bullish, higher lows, nothing really bearish here, right? So the technicals, I would say, don't align with what I'm looking for now, but I will also be paying attention to the technicals, obviously. But I will also, if you go to the daily chart here, you can see things have been pretty overextended for a while. That daily view here, 4-hour, not too much. But going back to what I was saying, the fundamentals will also be important. So looking at earnings reports, comparing to last earnings, comparing to what the expectations are. Like I said, Google had good earnings, but looking at Nvidia's, looking at Apple's, looking at Amazon's, looking at these earnings will be very, very big as well. Also looking at economic data, looking at NFP this coming up Friday will be important. So be sure to keep an eye out on that report or economic news release. And also headlines. New things are always happening. You had, tariffs slapped on different countries, and that caused the markets to fall. You had things going on in the Middle East, right? Geopolitical tensions that you just can't predict. And so these things are still out there. I would say it's less likely now. I think things have calmed down, obviously, and I would say the markets agree with that. But, be on the lookout for that. One thing people struggle with is adapting. Changing is very hard. You can be bullish one way, one time, and things just flip on you, but you don't want to take the time to realize, okay, things are actually, my thesis may have to change. I could be wrong. So that's important to understand. So anyway, hopefully you guys enjoyed. I just wanted to give you guys a market update on my thoughts on the NASDAQ tech market. Obviously, if NQ falls, ES will probably fall as well. ES has been very, very strong. I would say ES has been a little stronger than the NASDAQ. We've really been seeing other sectors see some love. And we can take a look at the heat map here and see that. If I go to, let's go to like the last week here. You can see NVIDIA is not really up pretty. It's even on the week. Microsoft's even on the week. Google's up earnings this week, but look at the other sectors, right? It's something we really haven't seen recently. So other sectors, banking, seeing some love, retail, health. Health was getting crushed. We see that, if we take a look at YM isn't at all-time highs, but it's been, looking decent when it comes to lower time frame chart. Um, Obviously, some big levels here on YM as well. Yearly open will be important to watch, and on the weekly chart as well. I mean, do we make a lower high from here to here? That's something to watch as well in terms of the bear case. All right, taking a look at dollar index as well here. Dollar has continued to trade lower. I think dollar will continue to trade lower. The only reason I don't think dollar will trade lower is if you see a very risk-off environment where tech is or U.S. equities are falling, stocks are falling, and dollar benefits from that, from the heavy selling in stocks, liquidity flowing into safe haven assets like dollar. But I think dollar will just continue lower for now. And that has also played a part in Bitcoin, in the bull case with Bitcoin. Bitcoin has benefited from that dollar downfall, but the fundamentals for Bitcoin have also been good in terms of the adoption with institutions, and also with the U.S. getting more involved and other countries getting involved, and other countries that don't have a strong, or have a currency that's really strong, being able to use Bitcoin as a currency. So it definitely has helped other countries as well. All right, so that's going to be everything. Hopefully you guys enjoyed. If you have questions, leave them down in the comments. And like always, I'm always around to help. And if you'd like to join the community as well, that'll be in the description down below. Take care, guys.